Joining me today is Bob O'Brien, Vice Chairman and U.S. Real Estate Leader for Deloitte. Bob, let's start by talking about distressed asset funds. We've seen these companies receive mixed reviews so far. Well, what's your take?
Well, you know, a number of distressed asset funds went out and raised money, but then had trouble investing it. The distressed assets coming to market has actually been slower than expected. But you know what, I've seen a lot of real estate property going back to banks in the last quarter and into the first quarter of this year. I think we're going to see distressed asset activity really pick up.
And is there a catalyst that you're looking for in terms of when REIT M&A will reach these levels that people expected?
Well, it's interesting because I think we're already starting to see signs on it already in terms of investors reaching out to Deloitte, talking about transactions, looking for due diligence services, that sort of thing. So we're starting to see activity already. I think the catalyst really as job losses started to slow, as consumer spending seemed to bottom out, people felt like they had more visibility in terms of what the recovery might look at. Now that visibility is really perceived as something pretty slow, a slow recovery. But nonetheless, I think people had better visibility. I think that's ultimately going to drive the M&A work.
And let's take a look at the IPO side. Are you thinking that activity is going to pick up as well?
I think there's a real argument for more public ownership of real estate through public vehicles. It's still a relatively small part of our industry in terms of public ownership. So, and I think the REIT model has performed well through this downturn.
And from a regulatory perspective, what are some issues that you're keeping your eye on this year?
Well, one of the things we're looking at pretty closely is how some of the new regulatory requirements around private equity firms and hedge funds are really going to impact real estate investment advisors and real estate investment funds. As you know, Matt, many REITs partner up with real estate investment funds and real estate private equity players. How will the new regulatory rules impact those entities? I mean, that's what we're looking at pretty closely.
And overall, how would you describe or rate REITs' communications with their investors and their issuing of their financial statement?
Well, you know, from my perspective, first of all, I see the clients I work with. And a year ago, when we were in the financial reporting season, and there was just tremendous uncertainty about everything that was going on, whether it was real estate values, liquidity, access to capital. I was really pleased with the REITs that I'm associated with how they stepped up and really were pretty candid in their communications around all the uncertainties to their investors and to the broader market. We're seeing that again this year. Now there's a little more clarity, maybe a lot more clarity than we saw a year ago. But nonetheless, I've been really impressed with the transparency that REITs have shown with respect to the difficulties the real estate market has been through over the past 18 months.
Bob, thank you very much.
Thank you.
For REIT.com, I'm Matt Bishar.